Hey guys and dolls, it's Jason. I hope everyone had a fantastic weekend. I hope you're all well rested and ready for the markets this week. The market has actually come up green today, so we are going to dive into my computer in a second, go through some of our plays, and I'm going to give you any news and some new plays that I'm going to be considering right now to load up on due to the recovery that we are about to see in the markets, as we do see a slight heavy shift from that tech sector and that sell-off from growth stocks to value stocks. So I am going to give you guys some new plays that I haven't spoken about before on this channel, so I'm quite excited. I have been doing a little bit of more research into them as well, and I'm quite excited. I'm going to start to add them into my portfolio, and I just want to say again, well done for getting through this crazy time. We've had an absolutely crazy 3 weeks. I know the markets have been really tough lately, and again, like I say, you've always got to have thick skin in the market because it is not all green. But always remember that when we have these opportunities in the market, it's such a good thing, guys. It's a blessing. See it as a gift. You know, see it as you're queuing upside of, say, Harrods in England, and you got your favourite designer clothes and they're on sale, and you want to run in and you want to get them as quickly as you can. It's the same with the stock market, but the thing is, everyone seems to run the opposite way. Once you learn, obviously, to buy the dip, it can take a long time to do that, obviously, with confidence, and over time you will become more confident with the stock market. But if you look at the S&P 500, like I have done in my other videos, you guys can see that as history goes on, the S&P 500, despite the fact that we do have those bear markets, they usually only last for about a typical of 6 weeks at a time. So guys, this sell-off that we have, we are now in week 4, we are through February, we are in March, so I do believe that the markets are going to start to have a tipping point soon. We may see some interruptions, obviously, throughout the year, as we still have that shift from growth into value. But long term, I am a long-term investor. I really do believe that we are on the right side of change, and the majority of the stocks that we talk about on this channel are going to be in the green, and we are going to have a very, very bright future, and we are concentrating on exponential growth. So our portfolios are set for the years ahead. I'm really not worried about the daily noise and volatility that is being created right now in the markets, and of course by all of the news, people like CNBC that like to say stock market crash, and obviously then the markets come selling down. So make sure, obviously, to have your cup of tea, as I always say, chill out, relax, you know, just know that green days are coming. Today, like I said, we have actually seen a small recovery in the markets. If you do find value, then please hit that like button and hit that big red subscribe button. My name is Jason. Let's dive into the computer. Let's go! So guys, the first ticker up on my screen is Chevron, which is for CVX. Now, Chevron Corporation are actually an oil company. The reason why I'm showing you this right now is to show you how we have recently had a rally in oil prices, which is why we have seen a sell-off in tech. A lot of people have been moving their money from the tech sector. If I write tech in here, you guys can see that we have actually gone up into Chevron, for example, and you can see that, you know, the plays are going into those more kind of higher recovery plays, cruise lines, airlines, oil. And again, if I put Goldman Sachs up, you guys can also see that we are actually quite high up right now. We've had a big rally over the last week or two since we have seen that sell off. You know, this is Goldman Sachs, ticker symbol GS. So that is essentially what has been happening. That's where a lot of the money has gone. It is going into those financials, into that energy sector. As I said in one of my previous videos, I think the financial sector is up over 8%, and the oil is up over 12%, and that's just in the last kind of like month alone, I think. So that's kind of what has been happening in the markets, and another reason why we have been having that sell off, and as well, as you guys know, inflation and those bond yield prices. So two stocks that I haven't spoken about before, I will get into in just a second, but if we can have a look through, some of our plays are up quite a lot today, which is great. Tattooed Chef is up 5% on the day. That is absolutely wonderful news. I do love that. OPENDOOR is down, and again, guys, this is all due to the news that Shamath actually did sell, because he has a correspondence relation into OPENDOOR Technologies, one of his SPACs, and Clover Health, all of those plays. He actually sold all his stake in Virgin Galactic, not his business stake, but his personal stake. So what that means is a lot of investors right now are scared that he's going to sell out of his other positions. But I did address this in my last video. If you do want to see that, then click on this. It is all about SPCE. That is because he is actually down over £2 billion right now, which is laughable that someone is down that much money in the stock market, because they have that much money. It's just mind-blowing to me. And he's getting the money from, obviously, SPCE, and he's going to use that for climate change into a new SPAC. So that's what's happening, and obviously investors are now scared. They've pulled their money out of those other stocks. Obviously, NEO is at break even. Tesla is up 1% on the day, so that's good news. The EV plays are starting to have that little bit of recovery. They are starting to bottom out. They're having that kind of V-shape, that very small V-shape recovery today. So that's always really good news to see. Now, what is going to happen throughout the week? again, we just have to play it by ear. NNDM, some really good news there. We are up 10% on the day, so congratulations if anyone caught that, because you guys know that is in my second holding. Now, two of the plays I haven't spoken about before on this channel, one of them is Disney, ticker symbol DIS. So this is the Walt Disney Company, and guys, if I go over to this page, you guys can see that Walt Disney are actually maybe potentially going to be reopening their park as soon as April 1st. So this will be some good news and catalysts, again, all depending on what happens moving forward. We also have stimulus coming out. So if I type in stimulus on Google, so you guys can see that on Tuesday, we are actually due to have a 1.9 trillion boost to the US economy, and we have some stimulus coming, which is some good news. But again, long term, that may actually affect interest rates, which will then obviously set the yields higher, which could actually trigger another sell-off in the stock market. So again, we just have to be careful with how we deploy that. But in the short term, I think that is going to be a positive catalyst for the stock market. And that is why I think we are seeing a bit of a rebound today. So that is some really good news. But again, this is all long-term thinking. So I'm just giving you guys a small heads up as to what could happen. Again, this aim is to be signed, I think, on Tuesday. And yep, that's right, on Tuesday. And then obviously we'll find out later in the week, towards the end of March, whether that is coming out or not, which I'm sure it all will be. So that is some good news there. Now, Disney, with this recovery play, you can see that we haven't really had any sell-off. Now, Disney could be a really good play. They've got Disney Plus right now. That is due to become profitable at some point in the future. We've got Disney Cruises that could be opening back up potentially in the long run by the end quarter of this year. And again, we've got those parks that will start to reopen. So that is a lot of catalysts right now for this stock. So I think having this and hedging this inside your portfolio, maybe as a bet, you know, against all those high growth stocks, it is more of a value play, and it is set in that recovery mode. So I think that this could be a nice player to rebalance that portfolio, add some more diversification. Disney has seen some nice gains over the last 6 months to 9 months. So again, it is just about making sure that your portfolios are diverse. None of this is financial advice. I'm just letting you know what I'm doing with my money, and this gives you extra plays that we've not spoken about on this channel that could, you know, it's not going to give you potentially 100x like some of these other stocks in the long term. But again, if you have your money spread out into different segments of the stock market, then this could be a good bet, again, to hedge against all of those other plays in your portfolio and use as a recovery play. So that is one I am going to be talking about. I didn't want to talk so much about Norwegian Cruise Line, Royal Caribbean, or the airlines today, guys. That is just because they do have a lot of debt right now. They've also seen quite a big run up, and I'm really not sure what is going to happen with a lot of those plays in the next coming months, because again, there is still a lot of news and catalysts that could come out and act as negative for these plays. So we will have to just play it by ear. I will try and get some more updates out for you if I do hear anything. I did work for Norwegian Cruise Lines for a very long time, something I've not disclosed on my channel before, so I know a lot of people there, and they are a really great company. I was invested heavily in them. I did actually sell my shares recently, and I moved them into growth sectors. So that is what I've done with my cruise stocks, just to let you know. Probably not the smartest thing right now, because we actually had a sell-off in growth and more into value, but that is just something that I wanted to do. Again, my money is all set kind of in the future. Another play that we haven't really talked about on this channel is actually Riot. Now, Bitcoin, as you guys know, I'm extremely bullish on, and Riot blockchain has had a gigantic sell-off. So this could be a really, really good play to hedge against inflation, because they are related to and correspond to the price of Grayscale Bitcoin. So as the price of Bitcoin goes up, which I really believe it's going to be £100,000 by the end of the year, which is over a double up. So I'm just putting this play on your radar. Now, if we break down the charts, we can also see that we are actually below the 50 on the RSI. We are well, we actually did touch 30 on the RSI, so that would have been potentially a good place to get in. You guys can also see down here that we did actually almost touch that 200 on the SMA. So what I like to see on my technicals is if we are touching the 200 SMA, and again, we are actually touching the 30 on the RSI, those two would be a good indicator to me to know that I could potentially buy the dip as an opportunity. Again, are we still in a bull run with this? No, we've actually kind of sold off, and we've broken down from that level here that you can see that was running up. So this could be a sign that we are actually in a bit of a bearish territory, so we could still see a sell-off. Again, Bitcoin is extremely volatile, so I would not suggest putting Bitcoin at all in a portfolio if you cannot stomach volatility, because this thing can swing anywhere between, you know, 7, even 20% in a day. Sometimes 15% is very, very normal. But I'm very much a believer in Bitcoin, and I use it to hedge against inflation. ARK Invest are heavily invested, and again, they have and a thesis that Bitcoin will be £400,000 if all of the S&P 500 companies are to invest up to 10% of their balance sheets and convert it into Bitcoin in the coming decade. Then we are going to see a 400,000 price for Bitcoin. So that is just something to bear in mind, a play that we've not spoken about, and it could have some very nice upside. So that is one that I am watching, and I think right now below 40s could be a good hedge to place into my portfolio. MP3 Materials is another stock that we haven't really spoken about on this channel before. Now, this is a mining company. It's a US mining company. And the reason I'm bringing it up is because China actually I've just recently found out, may have some restrictions coming on, and they are the leader right now in global materials and rare earth metals. So this could be a play to hedge against that. And if they do, then that could be a nice addition to the portfolio. And again, we have had those big sell-off since $52. So that is the three plays I wanted to talk to you about today. A little bit of a market update, some tips and tricks as to what I'm doing. If you did enjoy this video, then please hit that like button. I would absolutely love to have you on this journey where we make money together. My name is Jason. I hope to see you back on my channel for some more content soon on investing. Stay safe, stay positive, and if you would like to see my recent video where I have mentioned what I'm buying right now on top of these plays, then be sure to click this video above now. I'll see you guys soon, and don't forget to have your cup of tea. Ciao!